Hi guys, hope everyone's doing good. This is Devang Mehra. Welcome to the market outlook for Monday, which is the 20th of December 2021. It's Sunday today, 7:50 p.m. Let me quickly brief you about the market outlook. So, as we discussed, there are no big events coming up this week. We have, the Christmas holiday season starting. So, make use of this time, spend valuable time with your families. But with respect to the markets now, yesterday was the quadruple witching in America. We had a big volatile session in America, but SGX Nifty has traded flat around for about 23 points down. But you had a very volatile session in America, especially how the Dow Jones has moved, but Nasdaq was quite stable last evening. So overall, we don't have any big events coming up, and I think everything, the state of the markets will depend upon, I would say, now the tapering concerns have been addressed. We know what to expect from that. So the inflation doubts have been answered. And now two things are bothering the markets, which is how long will the FII sell in the markets for? And secondly, what is going to happen with Omicron? Because I think a couple of countries, I believe Netherlands has started a lockdown, and a couple of other countries are starting restrictions. So I would like to observe how severe that becomes in the coming days. Of course, things will be discounted, but the state of the economy, the state of the market will surely witness jerks on news such as lockdowns coming forward. So that is two things, but otherwise on the company specific information, market specific, we don't have anything. I think the earliest event that comes in is the monthly auto sales, and followed by all the other monthly events, and we will have the quarter 3 earnings also in January. So that is something which will help the markets in January, which will dictate the direction of the markets in January. And in January we do have a lot of state elections, plus you have the budget in February. So all that pre-budget drama and the elections drama will dictate how things are. But as you can see, the FIs continue to sell in this market, and as long as they're selling, you will always see the big large cap stocks, banks, autos, consumption, all the big heavyweights of the index. They will be the one that will drag down. So no matter how the technicals will work, but as long as the FIs sell in large quantities, you will always witness the big heavyweights coming under pressure. So I will be, today I talked to the ANIA organization on women empowerment in finance. So that is one talk I would like you all to listen to, because I talk a lot about asset allocation. And on my Instagram and even on Telegram and YouTube, I'll post a link when the video is out on their channels. So listen to it. I believe it's going to be out tomorrow. I talked about very important asset allocations that need to be done going forward in this current market time. Secondly, the advice for all the long-term investors is, if you're sitting on equity that you bought in the last couple of days, you keep on holding that equity. Now let's take it very slowly. We'll start with the long-term view. We'll come with the intraday view, and then couple of things that I want to discuss for all of you, knowledge building. Firstly, we bought a couple of companies, large caps, which are going to get heavily beaten down as long as the FI sell. So, for example, HDFC Bank at 15.10, we bought ICICI at 7.48, HDFC at 27.20, and they are trading around 2 to 3% down, roughly, from their prices. Now, we have to understand one thing: the day when we bought those companies, you'll have to keep it. Remember that we bought it for considering that the markets will close for the next 5 years. So I always tell people this, I'm going to repeat it now, that right now, let us say the shares fall down 10% from these levels. We're not concerned कि share 100 से 90 जा रहा है, but we're looking at the 5-10 year perspective, and वो 100 का 90 नहीं देख रहे, हम लोग वो 100 का 200 देख रहे हैं. So that 10% should not make a difference. So that is how you think when you're investing. If you're not able to manage funds in this environment, if you're not able to allocate properly in this environment, my suggestion would be that you start looking for a good mutual fund. And I believe one advice I can give you is, if you want all these finance related advice other than the market, let me know in the comments, because I would like to see how many people are on this channel interested more other than trading every single day in future and option and Nifty Bank. But the advice I would like to give you all is that start to put some money in dynamic asset allocation funds, or which is known as the balanced advantage funds. Now that is very important. You have to understand how the concept works. If you don't understand, get in touch with me. I will brief you which funds are good. But what happens in these dynamic asset allocators and the balanced advantage funds is, that, see, firstly, we don't know, when the market will bottom out for sure, right? We have small money. We can always keep on predicting, but we never know for sure how things bottom out. But and when we buy a share, we become tensed and we don't know when to average those shares. But the fund managers, they have a good idea. You keep on, doing sips with them, so your costs keep on getting averaged out. They know when to enter, which to enter, what to reduce, what to add. So mutual funds are always a very good way to put money. Plus, in November, we saw good record inflows, despite of the big selling by small players like us. What happens in the dynamic theme that I'm discussing is that the fund managers, they have control to move the equity allocation to 30 from 30 to 70 to 80%. So for example, when the markets went till 18,600, so they can shift your equity focus in the fund from 30% all the way till 80%. So when markets reached 18,600 levels, they would start to reduce equity oriented exposure. At the same time, when the markets start to come down and trade at lower levels, they will automatically, without your approvals, they will start to increase the equity exposure. So this is a very good fund in a way, which a theme in a way which allows the fund manager to have control, because they are people who've been in the industry for a long period of time. So my advice will be, if you see, we have to eventually invest money here. We have to invest over here, over 5% dip, 10% dips coming forward. But if you are feeling relentless, if you're feeling anxiety, then just go with these funds and let the fund managers take care of you. But investment should be done. That's the long-term view. Coming to the intraday view and just some outlook on Gann that I have. Firstly, on the intraday view, you have to understand that whenever the markets are in a trend, whether it's a downtrend or in an uptrend, so if the markets are in a downtrend in the short term, whatever in the medium term, as soon as the lower levels break, you can short immediately. That's how things work. If the market is in an uptrend, as soon as the upper end breaks, you can go and long immediately. So currently, we can see that the markets are more or less in a downward pressure that we're facing in the market. So that means that whenever the markets keep on breaking these lows, you can automatically go short on that trade. So that what we discussed, we long on equity, but we can go intraday short on the market, try to balance out the losses we're doing in equity so that things become fair. And when the markets recover, we're doing good in equity. That's the plan going forward, right? So what we are discussing is, if you look at the markets right now, we got a good, a 3-day fall that you can witness in the market. And it's quite a big fall. I think from a 17,400 level in one single shot, the markets have fallen down about 400 points in the last two. It's a very vicious sell-off. And particularly because of, I would say, the tapering news, which came in the last couple of days. Also because I would say of the yesterday's volatility induced by the witching, the quadruple witching. So my view is that whenever the markets fall down very sharply, it's always advisable that you start to look for some kind of halt candles before you start to short again aggressively. What I'm trying to say is that we are again back at this 17,000 supports that the market is trading at, which has the highest open interest on the put side, which is trying to show you that the markets will try to hold 17,000 on the monthly closing basis. What that means is that if this level wants to break, in my personal opinion, if this level wants to break, then I really would like that the markets halt for a day or so, give an inside bar, and then they go down. That would give a very systematic or a very easy route for all the traders to make some money. Because when an inside bar is formed, that basically allows people who've gone short in the last couple of days to book their profits. At the same time, it gives a measure to people who are entering fresh shorts to have a defined, well-defined and a small stop loss. Because right now, anyone who has gone short has a stop loss over here. So I believe that having an inside bar is quite crucial here. Some kind of a small retracement, some kind of small pullback is crucial over here. So that is something which I'll be hoping for tomorrow. But that doesn't mean that we will go long in the market. It's quite understandable that, as I was explaining in the voice notes in the last few days, you have to understand the undertone of the market. If I open the 15-minute charts, you will get an understanding very quickly. If you open the 15-minute charts, our plan was quite simple. As long as 17,200 is maintained, we are okay with equity. We can go long on equity. But once 17,200 starts to break, then a 200-point range will open up for the market. So now that's been achieved already. It's a very vicious sell-off that we saw in one single day itself. इसका क्या मतलब है? That whoever was a bull, he was trying to protect the 17,000 level. So if you want to start buying aggressively in this market, you have to make sure that number one, if you want to do aggressive buying, you have to make sure that the markets, first of all, they start to go above these levels, or the 442 level that I've given you. That I believe is a very, very important level. So if the market goes above that, that is when you start to aggressively buy in this market. Secondly, on a short-term intraday basis, if you look for buying in this market, I would say let this level first be crossed on the upside. Right, you do have a formation of a W which gets completed above 17,100 levels, but that is again a level which could give you a small buying. Some kind of stability in the market would only be starting to see when the market start to sustain and hold 17,200. So the view for the intraday short term is very simple. As long as the markets trade below 17,200, I would like to have a sell on rise approach. And when the market starts to sustain above that, whenever in the coming future, that is only when I again look for, on the buying side as well, on the going long side as well. And above 442, that is where we get aggressively long. So the plan going forward is quite simple. Have this view in mind, and if the market keeps on breaking these lows, you can keep on going short. So the view for tomorrow intraday automatically depends upon how the markets are opening. See, if the markets are opening with a big gap up, then it will create volatility. Be prepared for that. Then whatever I've said, the inside bar concept will try to work out for tomorrow. So gap up, huge gap up will create volatility. But if the markets are opening on the flattish side, or if the market opened a small gap down, then easily if the 5-minute candle goes below these lows, then I believe you can go short in this market. And I think we have a good or easy 100-point correction on the intraday chart. That looks very likely, because if you look, we have this gap which is meant to be filled, and 16,900 can become the good target for intraday traders tomorrow. But provided that the markets go open flattish or small gap down, and then they break the lows that have been made today. So that is the intraday plan for tomorrow. A very big gap down towards 17,900. Let us say the markets tomorrow open somewhere over here. Then obviously we can't go short immediately, because some kind of pullback will come in the markets. The gap is already filled, and then we will have to observe in the live intraday markets, go on a 5-minute chart and just try to see how things are. So that is something which you have to keep in your mind for tomorrow. If you look at the charts of Bank Nifty, so what I'm again and again saying is, you should know when to go long, when to go short. Just don't have an intraday view कि नहीं low बन गया तो long कर लेते हैं. The market, if it falls 50 points, it can fall down 50 points further also. It doesn't mean you can buy. At the same time, अगर market expensive है, you should not be afraid to buy because it is just expensive. So remember that point going forward. If you look at Bank Nifty, you can clearly see the heavyweights in the banks have been battered. I think Kotak is the one which has been heavily affected. So I again personally believe that right now, I look at the 15-minute charts, you can clearly see that the markets, as long as it's trading below this supports I've given you of 344, 444, you're in a severe pressure. And this is the level from which the big selling has come in the market. So as long as the markets are staying below this range, I really don't want to look for any long opportunities. I might get some intraday scalps on the long side, but overall on the 1-2 hour chart kind of basis, I would still look for sell on rise as long as I'm trading below these levels. Same analysis for Bank Nifty also. If the market opens with a big gap up, volatility will be created, right? I'm again and again saying scalping will keep on happening, but the onus is on you. Do you want to play such volatile markets, or do you want to only play things that are safe? My advice is the volatility is high. So just enter the market for a few points for half an hour, 1 hour, and just leave the markets. Don't keep on chasing it from the top to the bottom. So that's the advice I can give you. Otherwise, you'll get slaughtered because of the volatility that you've been seeing. I think even yesterday, if you observe Bank Nifty from a 35,700 low, it went all the way to 36,000, gave a 250-point rally, then again fell down. So volatility is high. So be in the market for a small period of time, enjoy the profits, and then keep on getting out. So the view has to be clear when to go long and when to go short. Flat opening, small gap down. As soon as the lows break, you can go short. You can enjoy the momentum on the Bank Nifty. You do have a round number at 35,500. That automatically becomes the first target. But I think we again have a gap filling kind of concept like in Nifty, in Bank Nifty as well. So I think then if the markets are opening flattish, it is possible then they will come to test the lows which have been made, which is nothing but the 35,327 level. So that level will open up, which will then act as a support. So my view going forward is that tomorrow, if some kind of gap up starts to happen, if for whatever reason, then it can turn into an inside day, or it can turn into a sideways day or a volatile day. So just keep that point in mind. Otherwise, I've given you how the markets open, how they will perform. Rest, I will be there in the live market to give you some advice of when to do what and when to do what. But intraday volatility, whatever it is, it will go on for the next 10 days, 20 days, until whenever the FIIs are willing to sell in this market. But all you need to remember is that if you're not able to manage your equity, right, it doesn't mean you keep on buying every single day. We've discussed, we buy something at 17,200, then we wait for a 5% dip, then we buy over there, but we're not buying every single day. So remember that point. Secondly, mutual funds are something that you have to look into if you can't manage your investments. So that's, I think a SIP is a good way of going about what you want to do. If you're still not convinced about the dynamic asset allocator or the balanced advantage fund, then you can look for some large cap funds trading well, or you can look for flexi caps. So again, if you want more advice on the other financial aspects other than trading every single day, let me know so I can cater and make some more videos in helping you in those aspects. Because as you know, it is important for us to allocate our wealth rather than having all the ship parked in one port. So that is something which I'll advise. Or if you ask me how things are otherwise, I'll just give you one, something that I always enjoy some dates in this market. Some work, some don't work, but it is always good to keep them on the back of our minds. So 22nd December is something which is a good seasonal change. It is nothing but your shortest day in the world. So which we also called it's called the winter solstice, the 22nd of December, 21, 22 December. So they become very important seasonal change. And if you remember, we made some very good money last year on that same concept and how the markets, made a very important, you can look at the charts later. 21st, this was 21 December. It was somewhere over here, 21 December, 21, ये वाला candle है 21 December का. So go to the daily charts and you will see how major lows have been made on that day. So, if you follow Gann, any Gann practitioners that watch my video, Gann was very interested in the what he used to call the 90-degree swing chart. If you're aware of these concepts, then you would be very lucky. But the 90-degree chart is something that Gann talked about a lot of time, and a lot of dates that he used to rely upon on the 90-degree charts would be the 5th of February, the 5th or 6th of May, the 5th, 6th of August, and the 6th of November. So they were very, very pivotal dates on his 90-degree charts. And I can tell you all the Gann practitioners would agree on me with that. But as we all know, the equinox which falls on the 23rd of the spring equinox that fell on the 23rd of March, which we all are very well aware of, is a very important date on time. So if you carry out a 90-degree time going forward, a 90-week going forward, it falls on towards the 20th this week that we are lying into right now. So I want you all to just remember that Gann's 90-degree analysis has been helping in the last 100 years of finding a good amount of bottoming out and topping out of the market. So we don't know how these things will work, but it's always good to keep it in our mind. So observe the markets going forward. I'm not taking any trades as of now on the basis of this, but just some knowledge that I wanted you all to share with you all, that we're in the 90th week from the lows of 23rd of March. Consult your Gann practitioners and let me know what they think about it. So 22nd December, 21 December becomes a very important date on time. As I said, the winter solstice. So if the markets start to bottom out at those dates or around that week, then these things will make a lot of sense going forward. So just wanted to alert you. If I take a trade on this, I will surely let you know. But again, these things they can always go wrong, and that is why we have stop losses when we have a view and we trade on that view. But currently we don't have any trade open. So just all these things are there. Enjoy your weekend. We are heading into Christmas. Spend less time in the markets. Enjoy this 10-20 day holiday that you're getting with your family, and love also all, guys. Cheers.